Hello, 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 everyone. Happy CPI Tuesday. How's everyone doing? Good morning, Patrick. Good morning, Sterling. Thank you again for putting in all the numbers. We'll go through the CPI numbers in a bit. Good morning, John. Yeah, oh boy. BLS reports that core inflation rate was pushed upwards by expenses in real estate, travel, vehicle insurance, clothing, and leisure activities. Well, you don't need any of those things. Well, you don't need leisure activities. Let's see what else. January not a one-time thing. It is irrelevant because it's sell volatility by especially tech and mega caps. Duh. You just got to keep buying it. You got to keep buying it. Good morning, by the way, Sterling. Who else do we have in here? Good morning, Jacob. Good morning, Tony. Good morning, Daniel. How are you doing today? Hey, Charles. We'll wait for some more people to come in, but until that happens, let's just go through it. So also Supercore, which is not published, but Supercore minus housing is still climbing, not as much as in January, but still pretty hot number. I think it was like 0.47. So again, that's just too high but the market's shrugging it off, and you got the CPI numbers come out, and then it wasn't just volatility dropping, it was also, after initial dip, it was sell volatility after the event, and literally the volatility getting sold now, and it's buying in now. It's buying the mega caps and the big things pushing it higher. So still, volatility on a trend basis is still climbing slightly higher, but now on a pullback. We're going to have to see where this pullback bottoms. So the headline numbers, well, by the way, we had the NFIB Business Optimism Index coming in slightly worse. Then we had core inflation rate, forecast and consensus 0.3, coming in at 0.4, month over month, year. Down a bit from previous 3.8 versus 3.9, but higher than consensus of 3.7. Headline inflation rate coming in at 0.4, year over year coming at 3.2 versus 3.1 expected. Actually, I have Redbook also come out today at 3, so not dropping in the dumpster yet. But that's where it sits. But after those numbers came out, we had the initial sell-off, and then it was just buy it. Buy it. So that's where it sits. Let's take a look at the little drop in some of the mega caps right now. NVIDIA trying to bounce back and buy all the chips. Meta still running. Amazon, Google, slight pullback there. But that's what I'm going to keep an eye in some of these mega caps going into the open. Actually, at the open. The technology, let's just do a quick refresh of this. Technology still leading at 96 basis points, consumer, cyclical, and financial. Com services and industrials only slightly negative. Fed watch, let's do another refresh of this just to see if the market again is I don't think with this kind of data the Fed can start cutting as soon as people want, but it's still pause in March, which remember is 8 days from now. Pause in May, cut in June, cut in September, cut in November, cut in December. So still very aggressive, and we're still bouncing back to the upper end of greed. In terms of earnings, Oracle was a gap up on a beat yesterday. Nothing really this morning. It was all focused on CPI, and still after the close, nothing. Tomorrow morning, the only thing I'm really looking at is Dollar Tree. Let's see who else is rolled in here. Let's see who else. Good morning, Martinez. When is bad news finally bad news? Well, obviously not today. Not yet, at least. We'll see if this holds through the morning. That's really what I'm watching. I mean, the initial gut reaction, here you go. It was the sell down. I mean, the S&P dropped below 5178. What did it get down to? 5176.25, and then snap back. And now it's retracing a bit. Now it's coming back in to the area. So we're going to have to just see. But what's still the trend? The trend is still up. Again, rotation zone dip, buy. Rotation zone dip from yesterday turned into a buy today so far. I mean, remember, we've got to start closing. It's one of the reasons I do the rotation zone to keep me on the right side of things. Now we start closing below 51.42. Then it goes more to neutral mode for me. Then I start looking at things on both sides. But so far today, the key area we got to break above into the open is about 52.08. Okay, I'm just going to put the minor harmonics on here for retracement. And then you see, let me show you this real quick. Let me take off these other ones. So these are the harmonics from high on Friday to the low yesterday. So you see, stalling out at that 50%, coming back, 37.5%. Coming back down, there's a spike down and the spike up with the CPI numbers, but where did it stop? Roughly 62.5 with no close above it. So guess what level I'm watching? 52.20. Especially on a 1 hour, if we break above there, I want to follow through with a 1 hour close. Then I'm going 52.32 area, which is also this prior top you see over here. Then 52.45. And that's only if we can maintain a close above that 52.20. Into the open, about 52.08. Support coming in at 51.94. We break below that. I'm going to about 51.78 to 51.82. And then it would be 51.69 to 51.70. So those are the key levels I'm going to be looking at going into the open. Now, back on this daily, let me take off these other mini ones I just put up. Back on the daily, if we reverse and close below 51.75, which we did not manage to do yesterday, we snap back above that level. That's when I'll start watching for at least a retest of 51.58 and then a probable breakdown to 51.42 area, which would test the bottom end of the rotation zone. So that's the way I'm laying out my game plan today. Exactly. Good morning, Legion Reaver. What did Jim Bianco have to say? An interesting point that the longer they wait cutting, there's more likely there will be no cuts at all, as otherwise the Fed would be considered too political. Well, that's the other thing, that once you start getting into the September and November timeframes, which are the two meetings, okay? Remember, the meetings, let's just jump back here, which is it's a great point, you know, because you got, again, nobody thinks they're going to cut in March or May. So then you have June, which there could be a cut in June or July if they were going to. But once you get into September, the 18th, again, less than 2 months before the election day. And then especially November is right at the election period. They could turn into a pause if they don't want to be seen in political. So they could maybe get one cut in if they cut. But with this higher data, I don't know if they can start cutting just that. And then it's December on the table. So they could only maybe get in one rate. If they don't cut this summer, it could lead to maybe just one rate cut. But I don't know if the data starts warranting it yet. This is why, who knows? They're just going to say we're going to be data dependent. Good morning, Richard. Thanks for putting in the revenue was a miss, but that was everything celebrated off VPS. But thank you for correcting me, Sterling. So again, if I make a I misstated that with Oracle, so thank you. So for NASDAQ, again, it's pulling back now. So really watch because this NASDAQ support, 18,275 area. We start breaking below that, we're back in the tail area from the initial sell-off from the CPI. In order, though, for this to really start moving back on up, 18,345 is going to be key that I'm watching in the open, and then 18,414. The only thing that can get me really focused on more, besides a very short-term pop, would be to get a close above 18,483.75. Other than that, this has not taken off the potential double top. It has not taken it off the table. So if we reverse and then not just today, but follow through and close below 18,082.75, you've triggered the double. And remember, we've had waning momentum up here. So back to going into the open, we start breaking below this 18,276 area. 18,207, look how nicely the harmonics are lining up. Spike low, support, and the 12.5% harmonic. 18,207, and then the 18,138, and then you have the lows back from the 5th of March. So that is the game plan for the NASDAQ. Real quick, the Dow on a more macro level either still is not closed below the 38,998. That's what I'm watching on the closing basis for the downside correction. Other than that, it's running into a lot of resistance at about 39,380 to 39,400. So that's my key resistance area in that. Russell is just interesting. On any run up today, major support about 29, major resistance is 2090, major support is 2048. The VIX, again, it's not just that it was elevated yesterday but started dropping because you had the CPI coming out today. Immediately after the CPI, VIX just dropping. Okay, so I'm really watching this 1450 level. We start pulling back and it starts rallying back above 1450, then it's going to be more choppier to the downside unless we really break some key support. But if we stay below 1450 and we can get some traction going into the open, then choppy to bullish. The DAX, not much going to be watching to see if this rolls over, but it can't really, there's just not a lot of great patterns in here. Yes, we have this little mini double top. It qualifies. So that's really the only thing then, that if we close below 17,672, it is against the rotation zone though. So we're going to have to keep watching that. Now the note, finally, again, no close above the 62.5. No close. Let me unback adjust this. See, there's the non-back adjusted, which no close above the 62.5. All right. And finally, a rollover. So again, 111.27 on a closing basis, because that's with the stop being lowered. We break below this 110.26 is very key support. In the yield, remember, we never had the stop raise yet, but it didn't also close below 4 and is running back up. 415 is now key area. 415 is key resistance going into this morning, but on a closing basis, 417 to really get this thing back above major resistance. The 10-2s, this did not rotate up high enough to invalidate the double just yet, so we're still watching to see if we get the close back above minus 26 basis points. Dollar yesterday did not trigger a %B buy. This is just so far a bounce move. Now we have cycles turning up and getting out of overbought, but not a lot of strength. A little bounce in here, but there's a lot of heavy lifting to do to really get the dollar moving higher. Because if we really break above this 102.70 area, we're looking at 103 and then 103.20 as key resistance points. Crude, confirming but not triggering the lower probability to double. Not triggered. Still needs to close below 77.52, but this is turning into just very sloppy. I'm just looking really at these levels for pullback areas. If it does drop, you know, about 75.95 and then 75.15 area, that's about it. We're getting to daily cycle bottoms. So this is still building a pretty solid bullish base from my perspective. Nothing really going on natty gas. Gold, again, we ran up, topping a little sell-off after the CPI Key support is about 2150 to 2152. This is not surprising after this multi-day strong run-up. This does not destroy anything with the bullish case. Also, even to this 2150 was the prior significant high from December. So that's turning into support. What else do we have? What else? Yen, little bounce. Yen set up for today with a break of the high. It looks like it'll probably follow through with the percent beat buy, but you have to essentially go off yesterday's high because that set up with down here, you see this set up for a potential. That's where you start watching the key high, and then as long as it follows through with the close, it's just a bounce, but it's coming into some key resistance. So if you didn't take it on a break, I would not be looking to chase it right now. Again, this is a bounce up because you're coming into major resistance area and the declining rotation zone. So it's so far, and when I say a bounce up, this is when, from my perspective, you got to trail aggressively, and if it doesn't follow through and hold the close, there is no hold of it. Euro, still going to be watching to see if it drops back below about 108.80 in the short term. Other than that, just a short-term pullback. The key closing is still 109.72 for the continued move up in the euro. Spiders, again, 512.69, slight gap up this morning. Let's just do this. No close below the 62.5 yesterday. So we're going to flip this around to watch for today. So any rollover play would be to the gap fill to 511.28. And then I'd be looking at about 510.95, then 508, 509.75, then 508.50 to the downside. To the upside, the major resistance, 513.35 area, then 514.58 on at least a 1 hour closing basis to really resume the rally up. So that's exactly how I'm structuring the spiders and the Qs for today. The Qs did close, remember, on Friday below the 62.5. Yesterday, coming back down. The 87.5 was 435.52, and the low was 435.44. So far, that's tackled those. Right now, so it's from the probability-wise, it fulfilled its little probabilities. For today, 438.74. And then the close from yesterday, 437.39, 437.09. Key resistance on any rally, 440.40, and then significant is 441.95 area. In order to continue the rally, not just for today, but for the next couple days, unless we make new lows, it's 443.69. And yes, the potential double top is still in play. Sterling's 0-day options trades have now gone 10 winners and 1 loser for accumulated 98.5 gain in 30 days on 1,000 capital invested. Not sexy, but very profitable. Trading doesn't have to be sexy. It should be profitable. I mean, that's a good streak. That's a good streak, Sterling. All right, let's look at some other stuff. I see your comment, Christoph. I'll get to it in a second. Tesla is trying to still bounce, but any bounce would be still for a rollover play. If it does move on up, it's 188.14 for the gap fill. Just stalling out this first target area still. NVIDIA did not close below the 62.5, so still 847.28. So far, gapping up this morning. So if you flip around the harmonics in NVIDIA, since it's really been the market driver, you have about 924 is the key level to watch for over the next couple of days if it can close above there. Now let's look at, I'm just going to do Google if you don't mind. So look at the, please have a look at the monthly chart divided by Meta and zoom out. All right, we'll do. All right, I'll do Google divided by Meta. and zoom out. I like relative value as established support. That is a very strong support zone. So you're doing the ratio, which is great for pairs trading. So this is at a very key support zone. So that could be very interested on a relative value. So yeah, that's a great chart to point out. Thank you for doing that. Again, good. You learn a lot from people in this. I used to do a lot of pairs trading. And you can still use complete technical analysis. You can still use your patterns on pairs trading. Okay? So thank you again for pointing that out. What else do we have? We've had just a little bounce in Apple. But I'm still watching for rollover plays in Apple. Just on Google, we've had a little 3-day bounce right here coming into key resistance. So I'm watching to see if this rolls over or not in Google. It's against some very key resistance. And we get the secondary reaction back down. Meta, still holding the trend line and the rotation zone, so I'm still watching to see it. I'm now just watching to see if we close below yesterday's low. Yesterday's low, 476, is key for me on Meta. So far, gap up today, but if that reverses, that's what I'm watching is yesterday's low. These are just some key things. Microsoft, again, really pay attention to that 397 level on a closing basis. Trying to keep support, but if these things roll over now, we could be seeing a top, especially if this bounce does fail, the CPI bounce, if it fails, then we can really have a definitive area that things could roll over in. So I now am paying very close attention to the established low from today. If we stay above it, especially, that will be a key area for a closing basis moving forward. All right, that's where we sit. So let's just take a quick peek at the open. Nothing's really, or going into the open because I have to jump right before the open. So remember to look at your tick too. So it's still 5208 and then the 5220 to 5224 area. What are the reverse harmonics? So I pulled them off. Hold on. Let me get those back on. 52, yeah, 52.20 on the closing basis, then 52.32.25. 52.08 still going into the open. And the key support still is this 51.94 area. If we break below that, really focus on those spike lows from the CPI. At least from my perspective. I guess that's why you might tune in here to hear my perspective. Why is that? Oh. I hate this. Oh, boy. I wish it would stay. You could set that up for back adjusted versus non-back adjusted, depending on what contract you were setting up. Maybe I'm missing a setting in that. If somebody knows about that, let me know. Other than that, that's where we stand. So keep an eye also on that VIX, 1450. So the tick going into the open, keep an eye on the VIX this morning at that 1450 level. And then those key highs and lows established from the CPI number release. And with that, I will be back tomorrow morning to talk to everyone then. Bye for now.